Partner ecosystem is a big play. So you want to look at the performance of your partners. Most companies have way too many partners and a very small number that are actually producing. The 80/20 rule really applies. So put a lot more emphasis on your top partners and make them even more successful, as opposed to going too far widespread with people who just aren't really focused on your business.
Hi there, this is Vijay Damojipurapu, and you're listening to the B2B Go-To-Market Leaders Podcast. The show where I go behind the scenes with top go-to-market practitioners to discuss their mindset and tactics. Hello once again. Thank you for taking the time to listen to the latest episode of B2B Go-To-Market Leaders Podcast. Today I have another esteemed guest. His name is AJ Gandhi. He has a very storied career here in Silicon Valley and across the board. And I'm so looking forward to this conversation. I'm sure even you as a listener would look forward to all the stories and insights. With that, AJ, welcome to the show. Looking forward.
Vijay, great to meet you on the podcast. Thanks for having me.
Yeah, my pleasure. So always start off the show with the signature question, which is, how do you view and define go-to-market?
To me, go-to-market is the life cycle journey of a customer and all the functions that support it. So I think the most important thing is being holistic. And I think this is actually one of the biggest challenges, because go-to-market encapsulates marketing, sales, partner ecosystem management, implementation and professional services, customer support, customer success, so all those functions really need to come together. And what I think is a particularly big challenge in it, Vijay, is that there are few executives who actually have the functional expertise across all those different functions and know how they need to all work together. But that really is the job, and that's what's required. And because not many people have that full expertise, it often really underperforms. So I think there's a lot to improve in most companies when it comes to go-to-market.
Yeah, no, so I totally echo with you on all of those points that you mentioned, AJ. In fact, I think you are one of the few guests who has actually listed all the key functions. I've seen a lot of people center more around sales. I mean, that's a misnomer or a mistaken identity. When people talk about go-to-market, they over-rotate and emphasize sales for the most part. But you actually emphasized and listed all the functions. The only gap, again, it depends on the go-to-market motion of the product and the company and the market. The only gap I would say and probably include is product.
And it certainly all starts there. I mean, if we're talking B2B, Vijay, you could really say it's about two things fundamentally. It's about product and it's about go-to-market. And it has to start with, who's the customer you're serving? What are their jobs to be done? Where do they have pain points where you can actually help them in a way that's distinctive from what their current approach is or their alternatives. And so you have to start with something where you have a compelling value proposition. Once you have that compelling value proposition and an offering, then it's go to market to actually bring it to customers, help them understand it, get their attention, work them through. I think increasingly we're not talking about just the funnel. I'll use what one of my friend and partner firms, Winning by Design, calls the Bowtie, and that is winning a customer as a first deal is just the beginning of the life cycle journey. That it's about getting them to first value and making sure that they're getting sort of full adoption and hopefully retaining and expanding and becoming advocates.
Yeah, great point, especially on the last one. I'm a big fan of Winning by Design and the Bowtie model. And for me as well, when I go in and when companies bring me in on board as a go-to-market advisor or a partner, I heavily emphasize on the full funnel and life cycle, because what I've seen, I'm sure you can validate this to a large extent, is a lot of the go-to-market teams, and especially marketing, they over-rotate and emphasize on new logo acquisition.
They do. I think there are a couple of issues that are pretty big ones. So, first of all, if you look at a conventional, let's talk about software companies and SaaS companies for a moment, Vijay. I mean, historically, I mean, the spend on sales and marketing has been around 40% of revenue. So first of all, like pause for a sec. That's an incredible amount.
Yeah.
Yes, you have this wonderful 80% gross margin business, but you spent half of that gross margin on sales and marketing.
Right.
Actually, only 20% of revenue is typically spent on R&D. So it's kind of crazy how much money is put in
Yeah.
to the sales and marketing engine. But of that 40%, usually about 80% of it is on the sales function versus the marketing function and the post-sales function.
Yeah.
So it's heavily rotated towards the sales org. 25 to 30% of that 40 is on sales.
Yeah.
But what you have to think about what's happening now is so much more of the buyer's journey is being managed independently with prospective customers doing a lot of their own research, working with their buying committee without the presence of a salesperson.
Right.
So the latest data from Gartner actually suggests 80% of the buying process is done without a salesperson having access to that, buying that buying process.
Right.
So I think issue number one is just too much money is actually being spent on sales today in a lot of organizations. And you need to think about, well, what else do we need to do to influence the customer across their buying journey? So in those parts early where you're not present because they haven't contacted salespeople yet,
Yeah.
when you're actually working the deal, when they're working with many other people in the buying committee, many of which you'll never get a chance to meet to one-on-one
Right.
as a salesperson. And then completely agree, a lot more companies are actually getting half or increasingly now more than half of their incremental bookings is coming from existing customers. And I think a lot of the just sort of mindset of, hey, let's just hire a bunch of salespeople and let's hire a bunch of hunters. Um,
Yeah.
it's a bit of a legacy approach, and companies need to adapt based off of how the buying dynamic and where the bookings growth is going to come from.
Yeah, for sure. I think we can spend a full hour of the podcast just on that one topic, but we'll
Yeah,
save that for a different conversation. So let's take a step back. If you can walk your career journey for our listeners, that'd be great, AJ. So essentially, where you started in your go-to-market journey and what
sure.
led you to what you're doing today.
Yeah, I'll give you a bit of an origin story, then I'll give you an overview, Vijay.
Yeah.
So I started off as a generalist consultant at Bain and Company, and I was there for 4 years before business school, and I did strategy work, I did cost work, I did growth work. Thought the growth work was a lot more fun, especially
Yeah.
than the cost reduction work. I liked the strategy, but I found it a little bit high level, and I found my most impactful project was a 6-month project doing a sales effectiveness initiative with it was actually a food company that had 30 district sales offices. So I worked with them to just take a much more methodical approach, which I think today we would call sales process. So it was
Mhm.
opportunity management process, account planning, territory planning, regional planning
Yeah.
for their 30 district sales offices, and basically built what was um, in effect, a sales methodology and a CRM for them, and did 2 pilots and then rolled it out nationally. It's
Mhm.
probably the most fun I had in my consulting career. So I really loved it. And then fast forward, I did a startup after business school, and I was a co-founder of the startup. We were selling portal software. I was head of sales for the first year, and then transitioned my role to really more customer success and professional services. We hired a hired gun, big name sales leader, and we learned a lot of lessons. And
Mhm.
so we did okay. We sold the company, but we didn't do nearly as well as we'd hoped. So I reflected on that point. Okay, I worked at Bain. I've gone to Harvard Business School, and what I realized was I learned a ton from both of those places, but I learned very little about product. I learned very
Mm.
little about sales.
Yeah.
And the big realization I came to was B2B is mostly about product and sales.
Yeah.
So that really embarked my journey on being focused on kind of sales and go to market. And I did kind of come up through the sales and the kind of revenue operations and strategy ranks. So I had a career in consulting, which I was a generalist at Bain. I was later a specialist at McKinsey on go to market. I did two startups, so spent 8 years in two venture-backed startups, a portal software company that Mayfield backed, and then a sales and marketing predictive analytics company that Sequoia and NEA backed.
Mm-hmm.
And then I was part of the leadership team during the scaling years at Salesforce and RingCentral. Before my most recent chapter, and that is going into private equity as a go-to-market operating partner. And so, in some ways, a bit of an eclectic journey across a variety of different experiences. But what's been great about it is, I've done the high-level strategy side
Yeah.
from being in consulting. I've done the, hands-on, feet on the street. Won our first 12 customers in my first startup by spending a year kind of running around in the field. And there's nothing like the learning that you get from that
Mm-hmm.
experience. And then, I was involved in scaling, Salesforce and RingCentral, going from a one product company to multi-product, going from primarily a focus on the US market to multiple geographies, shifting from kind of SMB mid-market up to the enterprise. So that mix of experiences, and then having worked in, 20 portfolio companies in private equity and doing 40 diligence processes, I've seen a lot. So
Yeah.
I've worked with about 100 companies at this point. And, I learn every day in this gig, Vijay. It's like every company, there's a lot of pattern recognition, but
Mhm.
go-to-market is so vast. There's so many things to learn and to strengthen.
Yeah. Now, clearly, I mean, very diverse career, and it clearly goes back to how you answered and viewed the first question, which is how do you view and define go-to-market? And if I connect the dots, I mean, there's a reason why you actually listed out each and every function, because you actually were playing that role and a functional leader in each of those functions.
Yeah, what I found is I went into private equity. Well, first of all, I'm in the role. I'm a go-to-market operating partner. My firm gave me a fancy title, Chief Growth Officer. So
Yeah.
that means I'm meant to be the person who knows everything about everything in all aspects of go-to-market. And what I can tell you is nobody does. I came up the revenue ops and strategy ranks.
Mhm.
I did a lot of customer success. I had a lot of hands-on selling. I'll tell you, maybe the most challenging, in many ways, most rewarding sales job I ever had was I actually also worked at a boutique consulting firm called the Alexander Group.
Mhm.
And I helped them kind of rebuild their West Coast and tech practice after the dot-com collapse,
Yeah.
and just sort of rebuilding up the office out there. And my job was to sell sales consulting to sales leaders who thought consulting was bullshit. So you want to talk about kind of a fun challenge.
Yeah.
And so I really learned a lot in that role, and that's really what made me fall in love with the domain.
Mhm.
Was frankly, now the modern go-to-market organization, there's so much complexity in terms of segments, channels,
Yeah.
different kind of programs that you have to run, talents, et cetera. It really is much more of a general management job.
Right.
And so you have to have knowledge and skills across all the different functions if you're going to have a winning go-to-market organization that is growing, but also is efficient.
Yeah.
And so what I had to learn the most when I got into PE was actually marketing. I
Mm.
actually knew enough was to diagnose marketing and in many of our companies, because frankly, private equity typically doesn't invest in marketing,
Right.
especially for B2B companies. That was the area I had to just sort of double and triple down on to get stronger. And that was through third parties. That was through consulting with my network.
Mhm.
Just over time, my objective has been, hey, I need to know all of these disciplines. I'm not
Yeah.
going to be a tippy top expert in every area, but I need to understand how to think through every element. I need to be able to diagnose every element. I need to be able to understand, what are the value creation levers and types of programs that you need to run in every element. And then certain ones I can tackle myself. Other ones, if I'm going to do, brand strategy, if I'm going to do a really optimized paid digital program,
Yeah.
if I'm going to do SEO or now GEO, I'm going to pull in specialty experts for that.
Right. Yeah. And I mean, I think it also goes back to how you started your career, which was primarily in the management consulting industry, working with top tier brands, of course. And what I've seen is top tier management consultants, they have an approach into how to solve a problem, and in this case, the go-to-market problem, and then listing out the sequencing as well as the risks that have to be mitigated. So curious, AJ, in terms of like when you take on a new role, either within a PE or a VC portfolio company, how do you approach a go-to-market challenge as a
Yeah.
chief growth officer?
Look, I think it starts with diagnostic, Vijay. Look, I can go tell you, you know, a couple of things. My general philosophy is you got to get the fundamentals right. That is the most important thing. And it's easy to roll off what are the fundamentals. Hey, I need to have a clear understanding of my ideal customer profile,
Yep.
do really strong segmentation and targeting, understand kind of the buyer's journey and create a sales process that matches that. Have a good program for developing pipeline. Typically, it's going to be an account-based oriented program combined with some level of inbound programs that are digital. I need to have a sales methodology. I need to have a value selling methodology. So these are fundamentals. So those are important, but I actually think it's important to do a comprehensive diagnostic.
Mm.
And if you've done this work a lot, you can do it fairly quickly. So there's an element of qualitative, and then there's an element of quantitative. So I can go into more detail if you like me to.
Yeah, no, absolutely. That'd be great.
So here are kind of the pillars of the qualitative. I would say it starts at the strategy level, and there are kind of four big buckets. First one is understanding the market.
Mhm.
What's the total addressable markets? Who's your ICP, your target personas?
Yeah.
What are our customer problems? What's the competitive kind of landscape? So that's understanding the market.
Right.
Then second, you have to come up with the right sort of marketing strategy. So I'm going to assess, well, what's their brand? What's their positioning? How are they segmenting and targeting the market? What's the offer design and pricing? How are you doing demand generation? Then I'm going to look at sales. I'm going to look at the coverage model. What do you do direct versus indirect? Do you do PLG? Then I'm going to look at post sales. How do you implement customers? How do you drive customers to success? How do you support them? So
Mhm.
that's the strategy component. Then there's a foundation component that I also highlight in qualitative. So a big part of it is, of course, talent,
Mhm.
and that is, the leadership,
Yeah.
the roles that you've defined for the organization, the level of, how you do hiring and enablement, how you do operations, metrics and
Mhm.
target setting. And then within sales, their programs, so things like planning and resource allocation, sales process and methodology,
Yeah.
compensation and quota, sales enablement,
Right.
territory design, things of that sort. So I want to understand all of that and figure out, hey, where are you strong? And because I've seen a lot, you can identify, hey, what are the gaps? And
Mhm.
because what you're always looking for is to prioritize where could you get the biggest bang for the buck.
Right.
The qualitative, of course, has to be combined with the quantitative.
Yeah.
And so this is where you're going to do performance analysis. You start at the macro level, you look at, hey, what are the growth trends? And you cut it by, by segment, by geo, by product line,
Mhm.
by vertical. And so not just growth, but then also let's look at productivity and efficiency. So let's look at LTV to CAC. Let's look
Yeah.
at the kind of the magic number. Those are the aggregates, but then you want to go more granular and say, all right, let's assess marketing. Let's assess, demand generation, and what's the performance of all the different channels, and how do they flow through, from lead to bookings, and
Mhm.
look at the performance of the funnel. Let's look at sales execution. Let's look at, ramp to productivity for new reps. Let's look at sales performance distribution. Let's look at
Yeah.
variance for your top sellers versus your bottom sellers. Um, then third, I think partner ecosystem is a big play. So you want
Mhm.
to look at the performance of your partners. Most companies have way too many partners,
Yeah.
and a very small number that are actually producing.
Right.
The 80/20 rule really applies. So put a lot more emphasis on your top partners and make them even more successful, as
Mhm.
opposed to going too far widespread with people who just aren't really focused on your business.
Yeah.
So that's some of the quant. There's post-sales quant too, or right side of the bow tie quant, and
Right.
that's looking at how do you, big problem that companies have is they do ROI selling to win the deal, but
Mhm.
then do they validate the customers actually realizing value?
Yeah.
So I think it's really important to actually measure the value realization of a customer. And then if you do that, you're going to much better manage customer retention and customer expansion because customers will stay with you or expand if they're getting value.
Right.
So a lot of people just look at the lagging metrics. I think it's important to look at the leading metrics.
Yeah.
So those are the things that I look at. And then what that turns into is once I see that, it's trying to draw a 3-year plan for, hey, how much can we grow this company? How much is going to come from new logo? How much is going to come from expansion through upsell, cross sell? What are our churn and downsell expectations? How do we manage them? What do we think we can do on price?
Yeah.
And then are there new segments, markets, geographies, products that will enable us to grow further? So I want to have a 3-year plan of where we think we can get the business and then make sure we're doing things to support it.
Wow. So if I were to share, or if I were to say this to anyone out there who's listening to this podcast, the last 5 minutes is like a real grounding lesson in terms of how to approach go-to-market from a strategic, qualitative, and a quantitative perspective. I think it's very few, to your earlier point, AJ, very few folks out there, operators who have, first of all, accumulated this breadth of experience in different functions, also from a strategic to a tactical level, right? It's very few operators out there.
Yeah, no, well, thanks, Vijay. It's called having some years behind you. And also it's just having the intellectual curiosity. Like, for a while, marketing and partner ecosystem were the areas that when I came into this, into the private equity role, I realized, hey, I got to strengthen my game here. And so I kind of really went after it to, find experts, to find specialty firms and just get experience where it made sense. The thing what I'll also highlight when you do the diagnostic and you kind of go into the strategy, the foundation, and the quant and the growth planning is it gives you a chance to really evaluate the executives. And that's, of course, there's no bigger value creation lever than the strength of your executive talent.
Yeah.
And if you're lucky, you've got like the perfect CRO, the perfect CMO who can do it all, and you're kind of like a coach and a guide for them. In most cases, everybody's got their areas of strength, everybody's got the areas of less experience or needing development. So to me, what I seek to do is just sort of understand where their strengths are and seek to support them and reinforce them on the areas that they might not be as strong.
Yeah. So you mentioned something earlier on, which is showing the ROI when you're selling to a new customer, a new prospect, right?
Yeah.
What I've seen and what I studied is not many buyers or buying committees believe in ROI. So thoughts on that?
Are you saying they're skeptical because they
Yeah,
think
they're skeptical.
the figures
Yes.
that are thrown out are just sort of BS?
Yes. Yeah.
Yeah.
So your thoughts?
Yeah, so I think a lot of companies do overstate, and I'm not going to pick on a former employer, but I had a very large, a well-known former employer that talked about the impact of their software would have a massive impact on salespeople, productivity, like significant double-digit impact.
Yeah.
It was an overstatement. So here's what I think is required. There are a few components. So first of all is forget the number impact for a second. You have to know what are the jobs to be done that the customer's trying to tackle.
Yeah.
And you have to know what's their current performance, and you have to have a real case of, all right, what are you going to do that's actually going to make them better? So are you going to improve inventory turns? Are you going to save cost? Are you going to, enable them to raise their win rates because they get more insight? So you do have to have a real viewpoint of what are the business metrics that you're going to be able to impact.
Yeah.
So that's number one. I would say number two is, look, it's good to have benchmarks. And this is something which I think companies can do is if they're serving a particular set of use cases for a certain set of customers, they should actually quantify the performance. Like, here's how people do, and here's the range of performance.
Right.
So I think you can kind of come to the table to walk into a customer and say, hey, if you're doing this number of inventory turns, here's what we see is kind of 50th percentile, 75th percentile, 90th percentile. So you can actually kind of calibrate for them. Hey, here's how you're doing. So I
Right.
think that's one way to actually, bring some business case thinking. And then the next step is you should work with them to say, hey, look, I'm not going to make up the numbers and just say and promise you, hey, we're going to improve that by,
Yeah.
20% or 30%. Let's realistically walk through it together. So what it should be a mutual process of coming up with what the numbers should look like. And if and based off of that, if you want to turn that into some sort of tangible hard dollar metric. So
Yeah.
that could be a cost savings, that could be a revenue gain, that could be a risk reduction, that could be business efficiency, or sort of sort of financial kind of cash flow basis benefit. So you want to quantify all those things, but it's got to be your champion has to be working with you to develop those numbers.
Correct.
And then the investment for your solution has to be a meaningful multiple on compared to those numbers. And you should probably put a range on it. So to
Yeah.
me, the ultimate equation that I look at is risk adjusted return on investment. So whatever claim you're going to make about what the return will be, you
Yeah.
compare it versus the investment, and then you have to discount it for, well, maybe there's only a 50% chance that we actually realize that. And then put a range on it,
Right.
because really what you're trying to get to for the customers to say, hey, look, what would you have to believe for this to be worthwhile?
Yeah.
You don't have to believe that you're going to raise your sales productivity by 25% to
Hmm.
invest in a CRM.
Right.
Because if you get to a couple of percent, you're probably fine. But if you go to a board meeting and say you're going to raise it 20%, that's not credible.
Yeah. Yeah. No, I think that's a great explanation. It's more around working very closely with your buying champion and understanding their expectations from their side
Yeah.
to make it worthwhile and build like a business case. At the end of the day, that's what it is. Like real elite sellers, what they do is work with the buying champion, list out the problems, and build like a 1 to 2 page or business case and enable that champion to sell it internally on their behalf.
Absolutely. And I'll tell you the other part, DJ, that's really important from a value selling standpoint. You should really be thinking about it across the bow tie.
Yeah.
So it should start in discovery, and even in prospecting by BDRs. You should say, okay, well, they have this number of manufacturing facilities and this number of products. We're going to help them with inventory management.
Hmm.
Based on this, we're going to gather data points from the beginning conversation such that we start that business case, such that maybe when we have that first meeting with the customer, we could say, hey, well, based on these high level figures, here's the potential benefit you could have. So it's not just doing it towards the end of the deal. Where you're trying to go get something, approved by, buying committee, you're building it all across the way. And if you have to do something like a proof of concept, which is an investment for the selling entity, you want to make sure, hey, well, let's define the success criteria. But the part that people really miss is, okay, great. You did the ROI business case, you won over the buying committee, you got the deal done. Hooray. Now you actually have to measure, is value realized?
Yes.
And so what's going to determine the future trajectory of your retention and your expansion is time to first value. Because
Correct.
the champion put their neck on the line to say, okay, we're making this buying decision.
Right.
That's where they really get nervous.
Yeah.
Because now it's like, okay, is this going to work? Is this going to make an impact? Is this going to meet some of the promises that we made that I stuck my neck out and risked my
Yeah.
career on?
Right.
So that's where they're nervous. So time to first value is key. And then once you have that value, you have to make sure it gets communicated through everybody in the buying committee. And what often happens is, you had a senior set of people involved in the buying decision, the business problem owner, the economic decision maker, the champion. But then once you actually get into implementation, you're actually in mid-level people.
Mm.
And then those people in the buying committee don't hear much about it until the renewal conversation.
Yeah.
And so you need to be really proactive about keeping your focus on ROI business case and seeing if the customer is actually realizing it. And you want to do that well before you get into any kind of renewal conversations. And if you do, first of all, you'll distinguish yourself, because most companies don't do this at all. In fact, I would say 80 to 90% do not.
Yes.
And so if you want to solve churn, which is a big problem for most companies, it's actually kind of fundamental. Um, if customers are receiving value, the value that they intended to buy, they don't churn.
Right.
But most companies don't measure it.
Yeah. No, so spot on. In fact, it's all of these what he just stated is music to my ears because that's exactly what I quote unquote preach and teach to the companies and the clients that I work with, which is yes, selling is great. It's great that your seller did a great job and brought or got the logo and then the gong went. But the real game starts after that, starting with the implementation and the onboarding. And to your point, showing or measuring that first time to value, like define a metric and have your implementation professional services and onboarding team really lay out a plan and show those metrics to not just the mid-level, but to your point, the buyer, buying champion and the buying committee. And then that's just the beginning, right?
You do that, you set yourself up well. I mean,
Yeah.
I think, once you're there, if you actually are doing really good value selling, you actually get executives to attend your QBR because you're actually grounding them on the business value, and hopefully you're teaching them something about the business.
Right.
I think a big problem that customer success complains about is, hey, I can't get people to attend the QBR. Well, especially senior people. Well,
Yeah.
there has to be business value for
Yeah.
them. So if you're actually measuring customer value that you sold, you're going to have a much higher likelihood of doing that. And that plus, provide insight because what I'll tell you, like people don't really want to be sold,
Yeah.
but and people do not want to be pitched. But what everybody wants, look, every business has got its challenges. That's why they buy something. They have a problem. They want to do something better. And so, what they really want to do is they want to learn how are other people, what kind of problems are other people facing, and how are they solving them. So they're really interested to learn from their peers. And as a, whether a software vendor or any kind of vendor, that's kind of your currency for really getting people's attention.
Yeah, totally. I think there's a great platform. Make it even more real for the listeners. If you can share a go-to-market success story and a go-to-market pivot story, I'll let you choose which one you want to lead with, AJ. But yeah, all ears for this next segment now.
Sure. Okay. Go to market success story. I will take a company that's in the that does service supply chain software. What this company does is um, uh, they tackle a problem that is overlooked in most companies. So if you're a big manufacturer
Hmm.
and you have customers all throughout the world, and you have a big range of products. So imagine that you're a computer manufacturer, imagine that you're a medical imaging machine
Yeah.
manufacturer, you're an aircraft manufacturer. Um, you sell big complex systems and you have customers all throughout the world. And these machines, um, have parts that wear out,
Hmm.
parts that break that you need to replace.
Yeah.
So the question is, how do you actually make sure that you can meet the needs of the customer such that their medical imaging machine isn't down, and then the physician practice, can't operate for a day or two because their machine's down. So
Yeah.
that's the business. And what's challenging if you're in that market is, um, you know, for the company that I'm sort of referring to, they are a specialist software for aftermarket
Mm.
service supply chain. So literally like spare parts
Spare
supply
parts.
chain.
Yeah.
And
Got it.
that's actually quite different than initial manufacturing supply chain software. Uh, but that issue is often owned by like a director of aftermarket service.
Hmm.
And so that's a mid-level person. And so that was the challenge that the company that I worked with had. And so there are a few things that we had, and they actually had some really successful customers that they had a big impact on, but it was hard to win those customers. The sales cycles were really long, and they needed to find a way uh, to expedite that. So
Yeah.
that was kind of the problem statement, if
Hmm.
you will, BJ.
Yeah.
So step one was actually elevating the importance of this business problem.
Mm.
Um, So what the company was doing in too many instances, not all, but too many, was they get pushed down to a mid-level buyer, to a
Yeah.
director level person, and that director may like it, but the IT organization is going to say, okay, yes, I get it, I get that you want this, but I'm working on bigger projects,
Right.
and your project is lower priority.
Yeah.
So this is where the business value conversation kind of came in. We said, hey, there are actually three big economic drivers to why this is a critical problem to solve. The first one is inventory carrying cost.
Hmm.
Most companies will carry 2 to 3 times more inventory than they need
Yeah.
because they need the spare parts for all their products in the right places such that they can actually, serve their customers. So
Hmm.
that could be hundreds of millions of dollars of extra inventory that they're carrying.
Yeah.
So that's cost number one. Cost number two is related to um, uh, customer kind of satisfaction. The customer, when their machine is down, they've got downtime, which costs them a lot of money, and so you're going to get a lot of aggravation from them, and it's going to impact your customer relationship and your ability to grow. Problem number three is it's going to be higher servicing costs
Hmm.
because you might send a truck out to go, inspect a device and try to fix it and realize, oh, I don't have that spare part on the truck. So I'm going to actually have to,
Come back.
have a second service
Yeah.
call to do that. So those are three pretty big economic problems. And it's raising those to the level of the CFO
Mm.
to actually say, hey, this is not a director of aftermarket sales and spare parts problem.
Yeah.
This is actually something that's costing you hundreds of millions of dollars in extra inventory carrying costs, probably tens of millions of dollars in extra servicing costs, and actually causing a lot of customer dissatisfaction. So the first
Right.
one is positioning and messaging and
Yeah.
coming up with a value messaging ROI business case for
Yeah.
how you do that.
Yeah.
So that was kind of number one. Number two was actually just being super targeted about who you go after. So in companies that I work with, they're generally, B2B kind of upper mid-market enterprise customers. So it's just being extremely rigorous. What is the ideal customer profile? And that's not just what industry, what size, but
Right.
also, what does their tech stack look like?
Yeah.
What kind of business problems do they face? In this example, how many manufacturing facilities do you have? How many
Mm.
product lines do you have? How many service locations do you have? And how many customers do you have?
Yeah.
If and a lot of that stuff's knowable. You identify all that, and we realize, okay, let's focus on these three verticals. So what you want to turn it into is here are the 2,000 customers who are most high fit for you, and then let's tier them out A, B, C, D,
Mm.
and let's put a lot more energy on the A's versus the B's versus the C's.
Yeah.
So that's segmentation and targeting. The next thing to do is have an account-based marketing program that goes after them, and then strong sales methodology. And so that's sort of the componentry of how you make people successful. There was another effort to that particular company where we also put in a lot of energy to say, hey, look, spinning up a new planning system for specialty ERP could be very time consuming. So
Hmm.
let's find a way to actually get you set up doing a certain portion of the planning or for a certain set of product lines so we can get you to time to first value much more quickly.
Right.
And if we can do that, we're going to get more momentum to go do more. So maybe we can cut a smaller deal up front, get to value, and that'll get the organization excited to commit to something bigger.
Very cool. Yeah. It sounds like the buyer, the initial buyer or buying persona started with that after supplier inventory management director, but then you articulated so well in terms of how you build a business case and really elevate the problem up to a CXO level, in this case, the CFO level. And clearly, you had to work with the buying champion to get all these details. Sounds like it was a great success story and it translated into a sale, starting with the pilot that you just mentioned. Is that right, AJ?
Yeah, it's the journey continues for the company, but they've made a lot of progress.
Fantastic. Very cool. So now on the flip side, a go-to-market failure slash a pivot story.
Failure slash pivot story. I'm going to give you one that's kind of a tricky one for sure for us. And this is I I think the big takeaway of this one is going to be about um, having discipline.
Mm-hmm.
So sort of straying from their core ICP was an issue.
Right.
So that was one thing. I think a second thing there was, you know, there were just some decisions that needed to be made to strengthen some of the different kind of leadership roles and go to market. And I think that was an example of where we um, needed to be more decisive
Mm-hmm.
for the company. So I won't go into much detail about it, but I would just say so kind of big lessons that come from it is I mean the first one is um, I think the first one is strategy.
Right.
You got to really understand what problem that you serve in a distinctive way,
Yeah.
and have a real focus on your ideal customer profile. That's number one.
Mm-hmm.
I think the second lesson here is talent.
Mm-hmm.
You need to make sure you've got the right leadership team in place. Talent, no matter what you do, companies can be run by a set of executives. You need to make sure it's the right fit of
Yeah.
people and they have the right backgrounds for tackling it.
Yeah.
I think we had a little bit more of a enterprise sales leader for something that was much more of an SMB sale,
Mm-hmm.
and uh, there's some other roles where they didn't quite have the right, functional experience
Yeah.
to be successful. And so I think in this instance, these were just um, two areas where, we need to be smart about the fundamentals.
Yeah, no, fair enough. I think all those are fundamental issues, and typically those problems show up over a span of what, 3, 6, or 9 months. And the impact, if you are brought in as a chief growth officer in any of these portfolio companies, right? And
Mhm.
if you were given like a 3-year target, how would you typically handle that situation? Because you would need some time for all these scenarios to play out and then pivot your growth plan.
Yeah, so and this is the tricky thing about go to market because
Yeah,
the growth side of things it can take a while
yeah,
for things like you think about okay I'm going to diagnose the issue I'm going to go implement some program
right.
the diagnosis might be the first couple months the program implementation might be 6 months
Yeah,
a sales cycle might be 6 to 12 months
right.
so you add all that up and you're towards the latter part of the second year before you're going to start to really see the impact.
Yeah.
So it's really going to be year three that it's going to make a big difference on the numbers. So I would tell you, you have to approach it on a couple of dimensions. The first thing is you need to be decisive about the management team within the first 3 months. And
Mhm.
oftentimes in diligence, you're going to figure out, do we have the right team in place or not? But within, the first 100 days, you've got to have a decision on and get the right management team in place. And
Yeah.
if you need to make a change, that needs to be done. And you need to make sure that that team is fully intact and ready to execute within 6 months. That's number one.
Mm-hmm.
I would say number two is every organization that I've seen of any scale, there's waste. There's
Yeah.
waste in, sales performance distribution. You have lots
Mm-hmm.
of sellers who aren't actually performing very well. You have waste in, maybe we're in too many segments. I could give you an example of another company, $100 million company
Mm-hmm.
that was in 20 countries. That's just
Mm-hmm.
way too many. A $500 million company that was in 50 countries. Not all of those are equal. So you have to
Right.
actually evaluate them and kind of prune the ones out that aren't worth it. They don't have the return. So that's a form of waste.
Yeah.
Another form of waste, again, the sales leaders. You need to understand how is marketing spending its money. There are channels and campaigns and programs that don't make sense. So I think the one of the ways to quickly get impact is go figure out where that waste is
Yeah.
and rip it out. You might have too many technologies and tools.
Mm.
You might have management spans of control that are just too narrow. We see organizations where you have an expensive manager with only three direct reports.
Yeah.
Like that's just not so. Go after the efficiencies. That's something cost you can always take out more
Right.
quickly.
Yeah.
And it sounds kind of harsh, but look, you want to get rid of the waste so you can take that money and reinvest it in things that are going to make a difference.
Correct.
So getting the efficiencies is sort of the second thing. The third thing is actually the third category is then looking for what are things that are going to lift the top line that you can execute fairly quickly.
Yeah.
There's often opportunities on price. Most companies aren't super disciplined at looking at, hey, what's the value that my customer's getting and what's the pricing? And
Right.
then many companies as well are not that disciplined about their pricing and discounting levels. So there's often a big opportunity to optimize the pricing for the existing customers. And that doesn't mean peanut butter spreading, hey, a 10% price increase. It's like, hey, if somebody's getting a lot of value, a lot of adoption, and we know what they're using it for is mission critical, you have more pricing power there.
Right.
If you have another customer that's, it's a more marginal use case and the usage is less, well, then you're going to need to be a little bit more careful. So price is a big lever. Tightening discounting practices, that's a big component. Another area that you can get a lot of value from more quickly is related to existing customers.
Mm-hmm.
As you kind of mentioned in the beginning, people naturally put all this orientation towards, hey, let's do all this ICP work, let's do all
Yeah.
this data analysis, let's use Clay and do all this data to optimize our segmentation and targeting. And yes, absolutely. But where do you have way more data? You
Yeah.
have way more data with your existing customers. And what's the case, and it just the rigor is seldom applied there. So what I found for this one business services company, we just looked at financial services and we looked at what's the penetration, so the spend on our company's services compared to the revenue of the customer.
Mm-hmm.
And like the 90th percentile customer spent 10 times as much as the 20th percentile customer. So why were they spending 10 times more? And we had a customer that was in that industry. Like one was spending 40K and then the other one was spending, 1.5 million.
Mm.
And they were the same size company. And people are saying, oh, that 40K customer is not that important. Like, it's a $20 billion company.
Yeah.
It's like we should be growing there much more. And this is
Exactly.
just with the core product.
Right.
So it's using all this data that you have, and you have all kinds of data. You have product usage, you have customer
Right.
support, you have professional services,
Yeah.
you have now we have call logs, et cetera, all kinds of data. And you could use that to have way more targeting for expansion, for upsell, for cross sell, as well as making pricing decisions. So I think really optimizing that existing customer, that's another area that you can do more quickly. The final area takes longer. If you want to sell into, if you're trying to strengthen your sales team, if you're trying to sell into a new segment, if you're trying to build a partner ecosystem, those are very valuable things to do, but they may not yield that much in the first 18 months.
Right.
And the problem is, you can't wait that long to actually have some impact. So you've got to do a mix of things to make sure that you kind of earn the right to actually take that stuff on. And the reality is in private equity, the board, the investment team, there's kind of an impatience to getting results, and you just can't wait that long. So you have to find a way to make an impact more quickly.
Yeah, that was a great masterclass in itself in terms of how to approach, especially when you're at a CXO level, and how to approach like a 1, 2, 3 year roadmap and a planning perspective.
Yeah, I
So
gave you long answers. Hopefully that's what you
no,
wanted.
this was amazing. So I mean, it's really storied career. I learned a lot personally in the last 50 odd minutes. I want to see the more human side of AJ. So if you were to dig back and look back, right, what were like some of the moments maybe in like the previous large companies or startups or in portfolio companies where you were close to breaking down and you had to really dig deep inside to lift yourself and the team up?
I think it's the learning moments, VJ, of like, when I first started actually selling myself, it's just like kind of it's just all the mistakes that you make. So when I started doing boutique consulting at the Alexander Group, I was there for
Mhm.
3.5 years.
Right.
Well, one of my proud data points is I did repeat work at every client that I worked with except my first one. And I learned some lessons on my first one. One was, my executive decks were, my presentation decks were, there was just too much to them. And I wasn't good enough at the domain that I knew how to synthesize it.
Yeah.
So it was a little bit too, it was kind of a bloated deck, which I think the senior executive, felt that way a little bit. I think the second was I actually was asked to do repeat work and I kind of blew it by actually overpricing
Mm.
kind of the work. And they kind of decided. We did this big diagnostic, and we did this survey that gave them insight into how the business was doing. And I probably priced it two to
Mm.
three times what I should have, just because I was trying to make my,
Yeah.
my bookings quota
Right.
for selling consulting. And that was really dumb. It's like that was my opportunity. That was sort of my Trojan horse to get in the door and find areas that I could be helpful. So that was dumb. I think a third is, when I was in my first startup and I was going after this massive deal, and I, kind of basically had won it at the
Hmm.
mid levels. But I got, twice I got snipped at the senior levels in ways I didn't see. And, there's
Hmm.
some controllability question,
Right.
but for at least one of them, um, but it's just understanding, you got to really understand how decisions are made and
Yeah.
find a way to get in. And maybe structurally sometimes you won't. Like in a boutique consulting firm, I was I'd done a ton of work at this one company, and um, uh, I was but the CEO wanted to do a big go-to-market transformation,
Mm.
and so it was me and my firm versus Bain versus McKinsey and versus Accenture, and
Yeah.
we actually got shortlisted down to us and Bain,
Hmm.
and who won over many of the people. But in the end, kind of the CEO decided to go with Bain because it was a safer choice.
Sure. Yeah.
And, it's totally rational that he made that decision. Um, and, structurally, you just have to understand certain dynamics as well.
Yeah.
So, look, I would say fundamentally, you learn from mistakes, you learn from failures, and
Hmm.
you learn to get better. And, to build up my experience, I haven't been an expert in everything always. And so it's just always seeking to learn.
Fantastic. And that's a good segue into the final question of the show, which is if you were to turn back your clock and go back to day one of your go-to-market journey, what advice would you give to younger AJ?
I would say, it's fundamentally is be curious.
Mm.
Um, And that's number one. Number two is really focus on the 80/20. You can't do everything across go-to-market. Some of the things that I highlighted to you, there's so many different aspects to it. You got to go figure out which ones matter the most, which ones are really going to move the dial, and which ones are the most broken, and kind of go after that. I think over time, it's simple to say focus on the 80/20 rule, but it's easy to get, especially early in your career. It's harder to have the judgment to get a sense of what really matters. So it's sort of learning the 80/20 rule. And I think the third and final one is just, look, at the end of the day, all this business is about working with people and its influence. And it's just really developing very strong kind of influence skills. If you're going to be good at this work, especially if you're like an operating partner or consultant,
Mhm.
you have to be able to build peer-like relationships and challenge people.
Yeah.
You have to do it, and it's influence without authority. And so I think those are just skills to hone.
Fantastic. Great conversation. A lot of learnings for me personally, AJ. So thank you so much for coming on the show, and good luck to you and the portfolio companies that you'll bring your great expertise to.
Vijay, thank you. I enjoyed the conversation. Thanks for having me.
Hi there. Thank you for listening to this episode of the B2B Go-To-Market Leaders Podcast. I have all of the show notes and a full transcript on strativ.com. STRATYVE.com. Subscribe on Apple Podcasts or wherever you get a podcast. Leave a rating and a review. Your comments will help other go-to-market professionals find this podcast.